through the Great Depression, a wealthy man. And one day, a young kid came up to me and he says, how did you get so rich? The old man says, well, sonny, it was 1932, the Great Depression. I was down to my last nickel. So I invested that nickel in an apple, and I spent the entire day polishing the apple, and I sold the apple in the evening for 10 cents. And the next morning, I invested those 10 cents in 2 apples. I spent the entire day polishing the apples and sold them for 20 cents. I followed this business plan for a month, by the end of which I had accumulated a fortune of $1.37. The kid said, so that's how you built an empire? Heavens no, dear boy. Then my wife's father died and left us $2 million. All right, okay, settle down now. Anyone out there ever get a predatory loan? You know what that is? Yeah, you have. Okay, big guy in the front row. So this woman goes into a payday loan shop and... Sorry, wise guy, but payday loans are no laughing matter for hard-working Wyoming people.
This is how payday loans work. A woman goes into a payday loan shop. She gets fast cash minus a fee. The lender holds the live check until payday. This creates a super lien, forcing her to pay the payday loan before all other debts and essential obligations. Wyoming payday shops charge an average APR of 521%. So for a $500 loan, the borrower might pay an initial fee of $100. The borrower can have an unlimited number of loans outstanding at any one time from any of the 90 shops offering payday loans in Wyoming. Industry representatives say that a payday advance is a short-term solution to an immediate need. But in reality, the business model aims to string borrowers along from payday to payday. Borrowers can pay off a loan and re-up for another loan in a single loan shop visit. This is allowed to continue week after week after week. Short-term loans at triple-digit APR, touch-and-go loans, and unlimited loans from multiple lenders creates a cycle of chronic borrowing, a debt trap from which it is difficult to escape. 90% of payday lending business is from borrowers with 5 or more loans in a year. The typical payday borrower pays back $793 for an initial short-term cash loan of $325. The Wyoming Department of Audit has documented the problem with payday lending. In June 2006, an official from the department wrote in a memo obtained by the Wyoming Children's Action Alliance,
"This office is concerned about the rising levels of the amounts being financed in post-dated check lending. It appears that some post-dated check loans are opposed to becoming installment loans and not the single payment post-dated loans as they are intended. This would result in excess finance charges being assessed to consumers."
In fact, 90% of repeat payday loans are made shortly after a previous loan was paid off. Victims of predatory lending often cannot afford to repay the loans, ending up in foreclosure, bankruptcy, or other financial hardship. This negatively impacts family economic security and drains assets out of the local economy. Abusive lending operations take root more in minority and low-income communities than elsewhere. The industry markets to the elderly and other government benefit recipients like the disabled and veterans because, according to an industry document, these people always get paid, rain or shine, and will always have money every 30 days. One payday lender's business plan declares that welfare-to-work mothers are an excellent opportunity for check cashing and cash advance businesses. An industry document obtained by CBS News states that among the groups targeted for payday loans are single-parent households with multiple children that are financially stretched. A payday loan industry newsletter describes the customer base for payday lending as being over 60% women. Wyoming women are particularly vulnerable to predatory lending. 44% of Wyoming households headed by single mothers live in poverty. Wyoming has the largest gender wage gap in the nation. In 2006, Wyoming women earned peanuts compared to their male counterparts, just 62 cents for each dollar earned by men. Women in some of Wyoming's most prosperous communities are the worst off in the state, with a woman earning as low as 44 cents to a man's dollar.
To my local neighborhood payday loan people, one of them after another, until I was getting loans that were equivalent to what I was making in my paycheck. Well, less than that, but by the time you added up the interest. Get a $600 loan for 1 month, you pay almost $200 for that monthly charge. You go back and do that month after month. It was a vicious cycle that's cost me thousands. At that point, I couldn't get a loan from my credit union. I tried. My credit wasn't good enough. I felt incredibly trapped and I saw no way out. I would talk to friends and they would say things like, "What's a payday loan?" And yet I couldn't figure out how it had happened. I was highly educated. I had done everything according to the middle-class American dream, but I couldn't find a way out. I lived in substandard housing because I couldn't afford a better place to live. I was paying it in these check loan fees. If you pay $200 for one loan, $60 for the next, $180 for the next, before you know it, you're paying I think it was almost $400 a month I would pay just in the interest fees, and I had to keep going back and getting them. I couldn't find a way out. What I did eventually was slowly, over the course of years, I would use my income tax refunds and I would pay off 2 of them, and then I would pretend that those places had burned down and I could never go into them again. And then I would slowly wean myself off $100 at a time. I have a little bit better credit rating now, so I have a little bit more that I can lean on, but I still feel like it's often just this darkness waiting to pull me back in, but I'm not going to let it. It was one of the hardest things I ever got out of, as far as when I was trapped in it, to the monthly thing over and over again.
In Wyoming, the amount of money loaned by payday lenders increased from $26 million in the year 2000 to over $79 million in 2008. A conservative estimate by the Center for Responsible Lending shows that payday lending costs Wyoming families over $10 million in excessive fees every year. Before the current economic downturn, 7 in 10 American employees were living paycheck to paycheck, making them vulnerable to predatory lending. Reforming the payday loan industry in Wyoming will help a lot of families hang on to their hard-earned dollars during increasingly difficult economic times. Here's a few simple measures that could have a huge impact. Cap interest rates at 36% APR or lower. Cap the number of loans a borrower can receive annually. Ban the use of bank account access as collateral. Increase incentives for small loans and emergency savings. Close loopholes that would allow payday lenders to circumvent new regulations. The payday lending industry is hindering, not helping the people of our state. Capping short-term loan interest rates at 36% APR or lower is a fiscally responsible measure that will help hardworking Wyoming families pursue the American dream.